Oh, okay. So
Okay. Let's kick off. Okay. So good afternoon, everyone. First of all, thank you for joining us today. My name is Laura. I'm Investor Relations Manager at Satoshi Systems. And I have a wonderful team here with me on site and on the other side of the screen. In fact, you will be able to meet each of them while participating in today's session. Furthermore, I'm pleased to say it is our first open investor session for everyone who's interested in trade flow, its journey, the market opportunity, and essentially finding out why now is the right time for trade flow to scale up. As most of you know, we have been running a campaign on Angel Investment Network, where the majority of you got to know us. And we're very happy to say that we've got a great response there. Over 70 investors have expressed their interest in trade flow. And this was and is the signal for us that this product has a great potential and that we must work hard to bring it to the next phase. I would now like to invite Saurabh Goyal, the CEO and founder of Satoshi Systems, to tell you more about the company as well as trade flow. And just a quick remark, at the end of the presentation, please feel free to ask any questions you have, and we will do our best to give you clarity on trade flow as much as possible. So, Saurabh, I'm happy for you to lead now.
Thanks, Laura. Thanks. So thank you everyone for joining us. And I see that people are joining from several places. We have people joining from Singapore, from US, from West Africa. So thank you again. And we will be conducting these sessions regularly over the next couple of weeks so that people can join at different time zones, etc. So to kick off, I just want to give you a quick brief of where we are today. We started in 2017. All of us are coming from a very physical commodity supply chain management kind of a background. Tala, who is our CTO, was with me at Olam International, where we developed a number of their in-house systems. And there we realized that there's a major gap in the market in terms of ready-to-use software as a service, which small and medium-sized commodity traders can start using. So that's when we started Satoshi Systems, and we have been developing Minerva for the last 4 years. In late 2018, Minerva actually went live. We now have more than 10 customers on it across several continents, including West Africa, US, Brazil, and Asia. And that product is now in a scale-up mode. We are hoping to scale Minerva from the current 11 customers to more than 300 customers over the next 3 years. We are also now looking at opportunities to spin off Minerva into a separate product called Trade Flow, which would be very specifically be used by UK-based exporters and importers who trade with EU, and they are now feeling a dire need for a system which helps them in making easy import and export declarations rather than going to an intermediary such as a customs broker or a customs agent. So we'll be talking specifically about trade flow, because trade flow is a great opportunity for us to not just scale up Minerva, but also to expand our solution from just being specific to commodity traders to a solution which can be used by all international traders, irrespective of the kind of commodities and the goods they are using. And the third solution, which will scale us up further, starting from 2022 onwards, is FinFlow. And FinFlow is a platform which will leverage both Minerva and TradeFlow to arrange easy trade finance for customers who are on our platform by alternate trade financiers such as fund houses and small commercial banks. So these are the three products on which basically all our business strategy rests. Minerva as the first product has been delivered, and we are getting good response from the customers. TradeFlow, we have a product roadmap in place, which we would explain to you in subsequent part of the discussion. And we are hoping that the first version of it would be launched later this year. And FinFlow is something which we would be launching later next year or early 2023. So most of you are probably already aware of the opportunity which Brexit present in terms of customs compliance re-engineering. I would now invite Bilal, who is our chief uh, 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 designer on market strategy, to explain to you a little bit more about the kind of numbers we see for trade flow and the opportunity over there. Bilal?
Yeah, thanks, Saurabh. Hi, everyone. My name is Bilal. I'm a commercial analyst at Satoshi Systems. I will take you through some of the research that we have conducted to understand the market size and characteristics of the custom sector pre and post Brexit. And hopefully this will give you a good understanding of the very sort of immediate and unmet need that we hope to solve with trade flow. So as you already heard, due to Brexit, any UK company that imports from or exports to the EU will be required to complete a UK customs declaration for every shipment. Previously, goods being imported into the UK from the EU did not need to be accompanied by a customs declaration. It is estimated by HMRC that this will result in an extra 205 million customs declarations per year, equating to approximately 820,000 declarations every day. Currently, there are approximately 140,000 businesses in the UK alone that make custom declarations for importing and exporting their goods. And on top of that, HMRC estimates that as of this year, an additional 180,000 traders will be required to make custom declarations for the first time to continue trading between UK and EU. Next slide, please. So the total available market between UK and EU is made up of approximately 490,000 companies, completing a total of 250 million declarations each year. And over 50% of these are completed by SMEs. So by our most conservative estimate, we aim to capture at least 0.9% of the volume of annual custom declarations, equating to at least 2,400 SMEs using trade flow to manage their custom operations by year 6 post-launch. And we will present to you the revenue we can generate based on this estimate later in this presentation. So I can now pass you back to Saurabh, who can speak more about trade flow itself and its value proposition in comparison to other systems that are out there. So yes, thank you for listening. Over to you, Saurabh.
Yeah. So in order to develop trade flow, we will be reusing many components of Minerva. So Minerva is already a full-fledged ERP solution for commodity traders and international traders. It takes care of activities such as purchase, sales, inventory management, logistics, scheduling, delivery, and invoicing. And it also has an integrated accounting module to it. As part of the accounting module, we already link with HMRC to do submissions of payroll, etc. So we have experience working with HMRC, and we have already started working with the HMRC teams for customs declaration now. So had we been developing this solution from scratch, it would have easily been a 2 to 3 year project. But because we are reusing many of the components of Minerva, it has scaled down drastically. And trade flow, as we envision, would be a solution which would enable small and medium-sized traders, particularly traders who trade on e-commerce platforms. For example, traders who trade on Amazon, eBay, Shopify, or their own website. We would be able to link to those websites. We would be able to get their operational data on our system. We are developing an algorithm with the help of customs expert, and Abdullah is here with us, who has joined us recently as one of the customs expert. And depending on who's the buyer, who's the seller, what is the commodity being sold, and what mode of transportation is being used, the system would be able to generate the necessary declarations, and then it would connect to all the necessary agencies. Going forward, we also believe that we would be able to connect to all the supply chain partners, whether it would be a logistics partner, your courier providers, etc., to give additional value add services to flow customers, which would be in the form of real time alerts and estimated time of arrival for both them and their customers, which they would be finding useful. We also believe that many of the customers of Flow would also be interested in the full ERP module of Minerva. So customers who are trading at least say $1 million or more in terms of revenues per annum we would be able to cross-sell Minerva to them. So hopefully, trade flow will also be a sales funnel into Minerva going forward. Some of the functionalities which we believe we would be able to offer on trade flow is modular flexibility, automated compliance depending on which industries we are targeting, streamlining their supply chain, and analytics for better visibility for both the traders as well as their customers and supply chain partners. In terms of existing state of affairs with Satoshi, we are a stable company making revenues of around 50 to 65,000 British pounds every month, and that is increasing. We have a very good team currently, which is taking care of the Minerva side of things, and we believe that we will continue to grow Minerva through word of mouth and through organic sales and marketing methods going forward while we are focusing on trade flow. And as I said, once trade flow is operational, a lot of sales would come back to Minerva via the customers of trade flow. We currently have close to around 11 customers on Minerva who are generating these revenues. These revenues are very stable because there is a lead time to onboard Minerva, and therefore we don't believe that we would be losing any of these customers in the next 12 months or so. So far, we have not lost any of the existing customers. We already have close to around 15 customers in pipeline for Minerva who are already discussing with us. So this slide is basically to tell you that as a company, we are not starting from scratch. We already have stable revenues, and those revenues are showing healthy upward trend, which we continue to look forward to. So even if we are not raising the investment, we should be able to sustain ourselves quite comfortably for the next few quarters. This slide is again to tell you how the three products relate to each other. So trade flow would be our most or the least expensive solution, which would be we would be offering to hundreds of thousands of customers, starting first in UK, but hopefully also then in Europe and then rest of the countries. Many of these trade flow customers would, we believe, be interested in taking part in the financing solution which we would be offering, where we would be connecting them to trade financiers. We are already working with several trade financiers who are using our solution to streamline all their end-to-end operations, and they are keen to see how they can tap into both Minerva and trade flow to offer their financing solutions to small and medium-sized customers. So we believe that we would be able to launch a platform in terms of FinFlow where we would provide these services to small and medium-sized customers, and we would be charging a small percentage fee on the financing arranged. And finally, our biggest footprint solution is Minerva, which is an end-to-end ERP solution. In terms of revenue, we will show you later how the revenues scale up. But Minerva is our most expensive solution. We charge anywhere between 30 to 50,000 British pounds per annum for a customer to use Minerva. FinFlow is a pure pay-as-you-go solution where we charge a fee on the financing arranged, and TradeFlow is our least expensive solution where people can onboard the solution with as little as £6 per declaration or £500 per monthly kind of fee for unlimited number of declaration. I would now invite Talha, who is our CTO, to talk a bit about how our technology makes us a major differentiator compared to the other providers of or competitors of trade flow in the market today. Talha?
Thanks, Saurabh. Hi, everyone. So we had a look at similar solutions on the market, and on the right side of this slide, there is a breakup of the competitors in this space already. As we can see, most are using old technology, which is hard to maintain and not easily scalable. They're built on old legacy tech stacks, and even the ones that claim that they are cloud-based are actually just basic applications, just hosted on the cloud and accessed via Citrix or some other type of application. A lot of the current systems rely on ERP applications to fetch the underlying data. So there can be a lengthy integration period between the two. before it can even be used. Trade flow will come with an inbuilt ERP solution leveraging Minerva, as well as inbuilt APIs to most of the ERP systems used by SMEs such as Xero or QuickBooks, etc. The larger solutions like SAP or Thomson Reuters, etc., are very costly. They have large implementation periods and have ongoing running costs after that. So they're not really useful for SMEs at the moment. Because the current focus on our competitors has been on larger corporates, we think we're in a great place where we can make the application modern, built on a new tech stack and scalable, so it will hit what the SMEs need at the moment. So if we go to the next slide, I believe Shalab can explain more about the architecture. So I'll hand it over to you, Shalab.
Yeah, no problem. Thank you.
Thank you.
So this is the proposed technical infrastructure architecture of the application. We have had success in the past using the similar architecture for other applications which we have built recently. And considering this is a greenfield project, which is one of the major benefits of this project, most of the other vendors who are currently offering customs declaration applications are seasoned players who have been in the industry for many years, and their application is not optimally tuned for EU, UK declarations, which is a recent market. And our research shows that this is one of the first ones which will probably hit the market, which will be solely designed primarily for the EU, UK market. So considering on the same lines, it's going to use the latest technology in terms of it's going to run purely being designed for the cloud. It's going to run on Microsoft Azure, on an Azure Kubernetes cluster. It's going to be scalable. From an investor perspective, the technology is something which is easily can be scalable, can be upscaled as per the application grows and the customer demands grows. As the load on the application grows, it can easily handle all that as the demand grows. It's also very, very versatile in terms of being able to promote new changes. It's going to be very agile. So whenever there is a requirement or there are any changes proposed by HMRC and there's a requirement to make changes within the application, those changes can be deployed very, very quickly once they have been tested. So yeah, just from a very macro level, the technology is latest, very agile, very easy to use, and it will favor development of applications which are very easy to use for the customers. In terms of the timeline, we have three different phases of this application. The first phase is being targeted to hit the market sometime towards the end of the year. That will enable small time vendors who are selling their products or importing products using intermediaries like eBay or Amazon, the e-commerce applications, and it will help them file their declarations. Based on our research, we realized those traders are currently at a very loss in a vacuum. They have very little information on how to go about filing the declarations. So this application is going to be very, very useful for them. The other competitors out there can do this, but then their implementation or their onboarding exercise is either lengthy or it's very costly for small time traders and they cannot afford the time duration and the costs incurred for the onboarding of those applications, whereas straight flow would be ready to go the moment they want to use it once we provide them the access to be able to use the application. Similarly, phase 2 will hit 3 or 4 months down the line, sometime around the end of March or first week of April 2022. And then the third phase will be a full product, which will be able to handle customs declarations for all kinds of traders trading between EU and the UK. And we foresee that we should have that kind of a product roughly a year down the line, more or less. So that's the kind of a roadmap we are looking at. I think there's another slide which gives details in terms of how the application interacts with different business elements. So obviously, we are going to design an application which is easy to use for our traders. It will be able to take the input required for the declaration in different formats from our traders. They could either email those input required parameters to us, their sales orders, or their orders or purchase invoices from their current sales systems, they can email to us, or they can link their existing application using an API to our trade flow, or they can have a web-based interface, the typical interface within the application from where they can do things manually if they wish to. The manual interface will also allow them to create templates. So if there is a typical vendor who is, say, selling T-shirts from Birmingham to somewhere in Germany, and that is their 90% of the business, and they can probably create a template within the application which has all the parameters predefined, and every time they want to file a declaration, probably the only thing they'll have to change within the template is the order and details of their customers to whom the order is being shipped. So it will have those kind of facilities within itself. Within once that phase is achieved, there is a major part of work required to be able to build the logic within the application to be able to generate the declaration from the input provided by the end user. And that is we foresee as a challenging part of the application. So that will be done using a couple of modules which will take into account all the different factors which are required to generate a customs declaration, whether it be the origin management module, the special procedures required for a typical kind of goods or service, and yeah, different insights which will come in from the customs expertise provided by the customs experts who have joined the team. And yeah, on the third right side, you see the external interfaces this application will interact with. So whether it be the third-party brokers or agents, whether it's any shipping or logistics firms or freight forwarders, and obviously the customs elements of Chief or CBS or any other agencies. So that's more or less like a technical and a business overview of how the application will work. I'll pass you back on to
thanks, Shalabh, for that. So this is again a recap of the revenue model we propose to have. So Minerva is already live, and as you can see, we are charging 2,500 per month per customer. Now with TradeFlow, we would be able to hit much larger customer base. In pay as you go, we will be charging £6 per document, which compares very well to the current rate of around 40 to £100 per declaration, which a customs broker would charge, depending on the complexity of declaration. There is a second tier of subscription, which would be around £500 per month, which would allow the trader to do unlimited number of declaration. And then there's a premium subscription where we would be charging 750 per month. This subscription would come along with the specialized advisory services, and if they have to do some special procedures like bonded warehouse or some kind of certification is required, then we would be able to help them through this premium subscription. The FinFlow fee for trade fund, trade financing would be roughly between 0.4 to 0.5% on the total amount secured through the financing. And this might change because this is a function of the market. Currently, the market charge is between 30 to 40 basis point. And going forward, we believe that that would be the percentage which we also should be able to charge. In terms of the way the financials will stack up, we have done 3 different scenarios, and happy to share the Excel sheet of these scenarios with anyone who is interested. Even in the conservative estimate, we are looking at close to $34 million in revenues with a EBITDA margin of 30% by year 6. And by year 6, I mean 2026. But in the most proven trajectory kind of a module, and when I say proven trajectory, we are looking at our historical numbers of the way we have scaled up Minerva, and we are also looking at some of the recently acquired numbers in terms of trade flow customers. So we did a campaign in the month of May and June where we mainly used Google Ads as the marketing campaign. We spent close to around 1,500 to 2,000 pounds on the campaign. We were able to speak to 200 customers through that campaign, and out of which around 80 have now pre-signed us for the trade flow project, for the trade flow product. So we know exactly how much sales and marketing effort would be required and how many customers we can reach out to, and basis that that is the projection we have made. And we believe that if everything goes well, then we are looking at close to $90 million in revenues, with again an EBITDA margin of 60% by year 6. We have the terms and conditions which we have shared with all the people who are interested in investing in us, and we also have our lawyer David in the call, who's quite a reputed person with experience in helping startups like us in their fundraise, and he is available to answer all your questions after the presentation is completed. This is just again a brief snapshot of the current capital structure. When we started in 2017, we had angel investment of around 750,000 British pounds, mostly by 4 angels, and who is represented by Kulraj, who is our investor director. I think he's also in the call. So if you have some questions on the existing angel investors and what has been their experience with us so far, feel free to ask him those questions. So in total, we are looking at around 600,000 to be raised this year. This money would largely be used for the product development, because we are looking to hire 2 senior and 2 junior developers. We are also looking to hire 2 SME experts, out of which one we have already hired. And Abdullah is here to answer any questions if you have on the customs landscape, and if you have any doubts on that. We are then looking at a phase 2 kind of investment raise later in 2022. And that money would be used mostly for sales and marketing, product promotion, and customer onboarding. I would now ask our Chief Operating Officer, Seema, to probably tell you a bit about what kind of team we have and what kind of team we want to build in the coming days. Seema?
Yeah. Hi everyone. This is Seema. I joined as business analyst and have now been promoted as chief operating officer. And we started with a team of 3 people when we started in 2017, and now we are a big team of 20, a team of 25 people. And we have a wide range of experience in the team, not only specific like being a customer software house. We also have experience such as Abdullah, who brings in extensive experience from the customs trading, customs declaration, and Saurabh and Tala, who have good experience into commodity trading and IT sector. Further, like Bilal, who not only does the content management but also a lot of huge research side. Laura, who brings in equity fund management experience. And we have a good team of developers, strong team. Shalab, who leads the product development side. And most of our team has grown during COVID times, as everyone is aware that most of the companies were going into remote working style. So we also saw a huge demand during that time, and most of our team, like we grew just from 10 to 25 in last 1 year, and our mix is like 50% contract and 50% permanent staff, and the team is spread across the globe. So that helps us in different ways. So we have our team based out of Ukraine, Lithuania, Switzerland, Amsterdam, India, and most of them based out of London. And we are growing our team out of Ghana because we see that there is a huge customer base over there, specifically for Minerva. So we are in a process of growing our team over there. So this, like a mix of having a global team, helps us to have a cultural mix and understand our customers from different locations in a much better way, because we have some of our team members sitting out of there, and if need be, our team members can go and meet them in person. So it also gives a personal touch over there. And third thing is that it helps us get best talent from the market at a very cost effective rate. So overall, we have a good product team, and we believe that we are in a situation right now that we have a strong, like good products developed, but we need someone who can lead the sales and marketing side of the business now, and also the financial and finance and accounting management. So most of the resource, most of the investment that would be coming in would be basically to hire talent towards sales and marketing, as well as for the product development. And yeah, that's all for the team side. Over to you, Saurabh. Thank you.
Thanks. So we don't have too many slides left. I think this is the last slide, and maybe Laura, you want to tell everyone about the AdSmart campaign? Yeah.
Sure. So and finally, one very exciting message. So Sky, a British broadcaster and telecommunications company, ran a campaign for SMEs to win £20,000 of TV advertising across Sky Media's channels. And we're delighted to have been selected among other 100 SMEs to receive the prize. And this is a huge achievement for us, as it will allow us to communicate our marketing message to a carefully selected target audience. And we're now in contact with some creative agencies working on producing a breakthrough advertisement for Trayflow. And the ad should see the daylight in the next month.
Yeah. I mean, this is exciting for us because we were working with the Sky team for the last few weeks, and they have come up, they have proposed us a very good strategy of how we can reach out to close to 250,000 prospective members, which they believe our advertisement can reach out to in terms of small and medium-sized traders based out of UK and entire Great Britain, actually. So this award will give us a good start, but obviously 20 would not take us far enough. But the campaign has the potential to scale up indefinitely, and once we have the product ready, we believe that we should be able to reach out to most of the intended audience, almost like a kind of a campaign which you see for products like Sage or Zero or other business applications. So we are quite excited about taking full advantage of this campaign. So yeah, so with that, we will probably close the presentation. We want actually to answer as many questions as possible from all the investors. We have sufficient team members over here from both the product development side as well as the commercial side. We also have David, who is our lead lawyer and works along with Harshini on all our documentation and the legal aspect of things. So he should be able to answer all questions on capital structure, terms and condition currently we are offering to the investors, etc., etc. So yeah, so feel free to ask us questions, and we'll be happy to answer as best as we can. So Tim, I see you. Would you like to ask any question?
Yeah. So hi everyone. This is Kayode from Nigeria, Africa. So good work, guys. Thanks for the presentation, clear and concise. I've got some couple of questions, but while the presentation was going on, I think some of them were already answered. But I still have like one or two which I'm gonna.
Sure.
So one of them is, what could go wrong? You know, along the line, what could go wrong, and what? So technically, what is the risk with all this, and how is the team mitigating against it? That's number one. Number two is, what is trade flows moat, right? So you know what moat is, right? In another way, we can say, okay, what's the barrier to entry for, you know, a competitor to offer the same service and pull some of the projected customers that trade flow is planning to target. So what was the company's mood? Then number three, which is the last question, so I can allow others to ask, will be this document was sent to us prior to now. I guess this is the revised one. But I looked at the numbers side, and on the subscribed share capital, I think starting from 2021, I think the number was, let's say, 1.3 million pounds, and it's constant up to 2030. You know, so when I look at that, what that is telling me is after the fundraise that is happening this year, then it means there is no other fundraise again, right? But in the presentation, you mentioned that apart from this 600K, there is, you know, another round that would help with global expansion, which will be sometimes next year or thereabout, you know. So I would have loved those numbers to reflect appropriately in the balance sheet so that we know what's going on. And the final one, so sorry, the final one is how much dilution should we expect after the 600K fundraising this year and the additional, is it 2 million fundraise next year? How much more dilution should we expect after then? So those are my questions. Thank you.
Sure. Thanks, Coyote. And all these questions are very relevant. And for your last two questions on the capital structure and dilution, I would ask David to answer those questions. And the first two questions I will answer. So David, are you there? Would you be able to answer the last two questions?
Yeah, I'm here. Let's take the. I'm here.
Yeah. So I'll start by the first questions, which was on the risks. So yes, ideally we should have included a slide on all the risks, and that's a very good point. And going forward, we will include a slide on the risks facing by the business. So to me, the biggest risk as of now, while we are developing the solution, would be the project risk and the development risk, where we might miss our timelines which we have projected. Now that is a risk which we are managing because of our experience in developing complex projects. And if you look at Minerva as a solution, it's an extremely complex product which we were able to develop in close to around 24 to 30 months. If you look at other companies which have developed similar products, it might have taken them several years more than what it has taken us. And we would be reusing many of the components of Minerva into developing trade flow. And we have got an extremely talented team which has many times developed solutions within time and budget. So we are quite confident that we would be able to meet the timelines. But as with any software development project, that remains one of the biggest risks in which we might be missing our timelines. And when we miss those timelines, we open ourselves also to competition. So that relates to your second question, I guess. What are the barriers of entry? So barriers of entry are not very huge from someone wishing to develop this kind of a system. But once they start developing the system, then they realize there are so many issues. And these issues are not just technical issues, but they're also like connectivity issue, getting the necessary licenses, getting the necessary approvals. It seems that it is quite easy to just connect to Chief using their API, but it is not really the case, because the connection to Chief happens through community service providers. You have to get the necessary badges to get those connections. So there are layers and layers of complexity, which only someone who has been working in this industry would probably fully appreciate. So from a high level perspective, it seems that the barriers of entry are low. But once you start developing, then you realize that there are significant areas of complexity. And we as a team are well suited to deal with those areas of complexity, because we are coming from that kind of a background. Again, because of our experience with developing Minerva as a full-scale ERP solution, where it is not just the internal organization we are providing services to, but we connect to supply chain partners, we connect to tax authorities, we connect to payroll service providers, we connect to third system providers. So we, over the years, have developed an expertise in basically uh, connecting to other third-party systems, and we would be fully leveraging that expertise in developing a solution and bringing it to the market as soon as possible. In terms of other risks, yes, there are risks related to any startup company where we might be running out of cash very quickly. But we are looking at several ways of bolstering our cash position. So we are speaking again with our customers, and we are trying to put in more robust payment mechanism where rather than being paid on a quarterly or a annual basis, we are requesting them to pay us on a monthly basis. So we have a continuous cash flow coming in from them rather than chasing them up for payments. We are speaking with our banks. So our corporate bank, which is Barclays, they are quite happy with the cash flow which they have seen in our account, and they are ready to give us a line which would help us reduce any volatility in our cash flows for working capital. We are speaking with VCs now. The only problem is that the discussion with VCs tend to take a lot longer. That's why we are going to angels like yourself for a quick cash injection rather than discussing with VCs. So yeah, so cash flow remains a problem like any other startup, but we are trying to tackle it at uh, in multiple ways. And as you have seen, that Minerva is already a robust existing solution which is generating revenues, and we have some customers in pipeline. So we believe that the organic revenues of our company will anyway go up in the next few months. So that is another risk factor, and how we are trying to mitigate it. Some of the other risk factors could be, existing competition, which though have a slightly different focus in terms of where they are targeting their solution and their technology, but they can always ramp up. They can always try targeting the same type of customers as we are targeting. We believe that probably they would not be able to do so in the next 6 to 9 months, because we are targeting very small customers trading on e-commerce, and therefore it requires a different kind of a skill in order to link up to those e-commerce platforms and get the necessary information, which again these larger platforms may not have. They may have to hire new developers, or they may have to hire or they may have to start thinking in new ways of doing business, which we currently are already in that phase. We have in the past worked with the small customers. E-commerce has always been a focus for us, for our smaller traders. So we would be able to do that job much better than some of the larger competitors we see. So yeah, so these are some of the risk factors, and we are preparing a list of all the other detailed, exhaustive risk, and we would be happy to share it with you. So hopefully I've answered your question, but we can also always get into a one-on-one session, and I can go into the details of all the other risk factors and barriers to entry.
All right. Thank you very much. Yeah.
David, would you like to answer the other two questions now? Number one is, I think the capital table we are showing is not reflective of the second raise we will do later this year. And I think the second question was, I'm sorry, I don't remember the second.
Dilution. Sir, it's about dilution.
Yes. How much dilution will happen once the second part of investment also happens?
I suppose just to answer that, just so I understand the second part of the fundraising, what's the total amount?
So in the presentation, we said that later in 2022, once the product is developed and we have at least say 200 customers on the product, then we would be looking to raise another 3 million, and that 3 million would be used mainly for promotion,
global expansion.
Yeah, and expansion. But the interesting thing to remember is that 3 million would be raised at a much higher value of the company. I mean, we believe that the value of the company would go at least 8 to 10 times higher once we have at least 200 to 300 customers on the platform uh, later in 2022 or early 2023.
Yeah, so I think to follow up on that then, Cody, to answer the sort of question, I suppose at this stage, nobody knows what a potential dilution would look like on a future fundraising, because ultimately it will depend on what pre-money valuation that fundraise occurs. And Saurabh's obviously said that the intention would be that obviously the company grows from this fundraise, the valuation is increased 8 to 10 times. And that would potentially be a Series A fundraise, hopefully, or pre-Series A. The valuations that you talk about are much higher. So in terms of how much you're diluted, it obviously will be a lot less than obviously if it was a lower valuation. So in that sense, everyone gets value because the shares are growing in value on the next fundraise.
Yeah. I mean, it is all up in thin air, but we believe that by the end of 2022, when we would have proven the efficiency of the product and we would have at least 100 to 200 customers running successfully on the product, the valuation should go up by at least 10 times. So right now we are valued roughly at 10 million. And by the end of 2022, if things go well, we should be valued at around 100 million. And then we are aiming that as per our projections by 2027, if we are generating 80 million of revenues with an EBITDA margin of around 30 to 40%, then looking at similar companies who have scaled up similarly, we believe that the valuation could easily touch $1 billion. So we are looking at a growth of 100 times in valuation between now and 2027, and a growth of 10 times in valuation between now and end of 2022. But again, these all numbers come with all kind of caveats, and there are risk factors as we just discussed.
I've got a question actually.
Sure.
So hi guys, it's Rashad Mughaliya. I actually work on the other side of what I work for with HMRC. So I develop some of the actual customs declaration systems. So 2 questions from myself really. The first thing is that there's something called a trader support service, TSS.
Yeah.
That allows some small businesses to submit declarations for free.
Yep.
Without any cost. So I want to know how you're going to sort of deal with that, whether you've taken a look at that. The second thing is that we've just had word that I think it's the import to export, I'm not sure which way around it is, that is going to be shut down from September or the autumn of next year. And Chief itself will be shut down in March 2023. So we see little value in trying to develop something for Chief at the moment.
Yeah, absolutely. Yeah, so thanks, Rashad. And these are very important questions, and which demonstrate that you have been working on these interfaces. So I'll answer the second question first. So we are already almost on a daily basis, we are discussing with HMRC, and we are in full flow of our development of our APIs with them. And they also suggested the same thing when we started the discussion, that you should rather develop the interface with CDS than Chief, because CDS is the one which will replace Chief. Now, the problem with that approach is that CDS is in the process of replacing Chief for the last, 7 years or so. And every year it gets delayed. So there is no guarantee that this time it will happen in the next few months as they are proposing. And our customers won't understand that. They need the declaration to be done, whether it is done through Chief or CDS. So we have taken a slightly different approach. We are saying that we will develop the interface both with Chief and CDS at the same time. So we are developing it in a microservices architecture, where there are several components which can be developed in parallel. And there's only one component which is dependent on whether the ultimate connection is with Chief or CDS. So we believe that we should be able to develop an application which is agnostic to chief or CDS, and that will give us additional advantage compared to existing market competition, because the existing systems are heavily dependent on whether it is chief or CDS. So if an existing customer has to change their connection from chief to CDS, it's basically they have to redevelop their entire application, which again would reduce their attraction to market and increase their time to go to market. So yeah, so that's the answer to your second question, that irrespective of how much time CDS will take to replace chief, we are going to develop a system which connects to both the applications simultaneously. And your first question was on TSS and TTS. So yes, we have been using those systems actually, and we have been speaking with the providers of the system and the users of the system. Now, TSS, we believe, is only for when you are declaring into Northern Ireland. Yeah, which is,
Yes.
yeah, and that too is very, I mean, it's not a very straightforward system. It is difficult to use. So very few of our customers are actually in a position to use TSS. DTS, Digital Trading Service, which was another system launched to help traders by a consortia of developers, have two disadvantages. Number one, it is extremely complex, so much complex that it requires a big team of people to support traders to do the declaration on it. Number two, they are still charging £45 per declaration, which again, the kind of customers we are targeting cannot pay. Our customers have a typical parcel size of say 100 euros or 150 euros. On that parcel size, if they have to spend another £45 for declaration, that makes the entire business unviable. And in fact, they have a third disadvantage, that the process with Northern Ireland is also under continuous flux. In fact, in fact, if you want to comment on that.
Just regarding the North Island protocol, regarding in terms of customs regulation and restrictions. A lot of traders nowadays, they are learning really how to get through the North Island, whether they're importing or exporting. And that's what we're doing. We're doing also a training session really in terms of the VAT claim, registering for the prefix XI, EU number, North Island. We try and really to educate the traders in a lot of restrictions and compliance. As you know, a lot of regulation rules is amending, and for ongoing period for being now almost 6 months, especially traders that I work with the food items, animal related, and all the licensing and the health certificate related issues. But having said that, we're trying to get really all the traders set up in terms of the customs related issue, for example, as I mentioned, registering for the FCI numbers and getting the right documentation, dealing with the right department in terms of health certificate or vetting related issues, and doing the import export declaration correctly. We have internal advice in terms, looking at the right commodity code really to establish the actual good really doesn't need the actual certifications or what they need in terms of documentation, if licensing, any restrictions. So we try to really set up an advice for them and look at the products very more details before we export or import, even if they come for import, we look at it even for pre-alert and which harbor, which port they're coming through, right, and what they need to, to adhere to in terms to get the good cleared correctly on time without requiring any delays, which incur a lot of additional costs, and so really ongoing assistance in terms of customs related issues.
Yeah. So what Abdullah have been doing since joining us about a month back is that he has been continuously in touch with the 80 customers who had pre-signed us for trade flow, and many of them have actually started taking formal customs advice from us. And that process helps us in two ways. Number one, it helps us to understand their customs requirement in more detail. And that's when we realized that many of the traders are not finding either TSS or DTS suitable for them, because it is not taking care of many of the special procedures, many of the compliance requirements which they are supposed to take care of. So that is one way it is helping us. Second way it is helping us is that it is anyway helping us generate some revenues on advisory basis, etc. So far, I think we have already generated like close to 20,000 British pounds in just custom advisory services. And we believe that we will probably scale up those advisory services, because anyway, it gives us additional revenue and it helps us understanding our customers' requirement in more detail. So yeah, so just to answer your question in a summary format, Rashid, we believe that we are on the right track developing simultaneous connection with Chief and CDS. And we are also on the right track compared to the existing platforms in the market, which is TSS and DTS. And in fact, we are not looking at just the two of them. We are also, through our customers, using all the other applications, all the other 12 or 13 applications which we have listed on our competitors' slide. We now have exposure to those applications. We are looking into it, and we are learning from what are the shortcomings of these applications. And we are making sure that the application which we will be developing will not have those shortcomings.
Well, I can tell you from my side that from my time where I support traders and CSPs that try to onboard, their systems really are quite old.
Yeah.
They're really very sort of monolith, definitely not cutting it.
Right, right. So for some reason, it is very strange that HMRC has spent maybe hundreds of millions of dollars on these suppliers, but the systems which they have developed look quite old and quite not very user friendly. Yeah.
That's,
so, and we, yeah.
I mean, it's just because the core of CDF is actually something called DMS, which is a Dutch system that's been implemented by IBM. So they've kind of actually worked with the systems of that.
Right. So yeah, Rashid, it was very nice speaking with you. And in fact, whether or not you join us as an investor, we would be very happy to continue our discussion with you and to probably learn from you with your experience on developing the interfaces.
Yeah, absolutely.
A couple of questions from me.
Sure.
One is, how much money have you actually raised in this round? And the other is, how did you come up with your 10 million valuation?
Yeah, so Bilal has prepared some analysis on the valuation, which we can share with you later. We should have included a slide over here. In terms of the money raised, we have raised close to 300,000 British pounds so far. I mean, these are soft commitments, out of which close to 200,000 has been committed by our existing investors and the network of people whom we have known in the past who are not on the angel investors network. And around 100,000 has been, people have expressed commitment over AIN so far. After this session, we would be sending across another letter to all the 70 or 80 people on Angel Investors Network, asking them how much quantum they are interested in investing in us, which would give us a better understanding of how much money we have some bit of commitment on. And once we think that we are crossing the mark of 450,000 British pounds in terms of commitment, then we will start sending out firm letters of engagement with these investors. In terms of the valuation, what we did was that we looked at other companies. So we looked at a company called C40, which is based out of Belgium. It is one of our competitors. They have recently raised 17 million pounds, and we received some information on how much equity they might have given to raise that money. So we have looked at them. We have looked at other similar companies which are in the area of providing business services through software. And these companies are like Sage and Zero, which are listed on the exchanges. So we have looked at their valuation, their EBITDAs, and ratios at which they trade currently on the stock exchanges. So yeah, so these were the two primary methods at which we compared ourselves to other companies, and we would be happy to send you an Excel sheet giving the valuation details. Internally looking, when we started, we were valued at 1.5 million in 2017. In 2018, an accelerator program took an option in us, and that option was valued at 5 million. In 2018, we didn't had any product, any revenues. And now sitting in 2021, we have stable revenues, and we are looking at explosive growth through trade flow. So internally, we believe that that's a good trajectory, starting at 1.5 million, going to 5 million, and now looking at 10 million valuation over the last 4 or 5 years of our existence. So these are some of the things which we have considered while looking at our valuation. Having said that, valuation still remains a bit of a dark science. There is no hard maths to it, but we would be happy to share the Excel sheet with you to show you the numbers which we have compared ourselves with.
Okay, yes, please.
Great. Okay, so please feel free to ask if you have any more questions. We are also scheduling some more of these sessions in the coming weeks because some people were not able to attend because of the time zone differences. And we are always happy to schedule one-on-one discussions if you would like to have them. And Laura will share her details with you. Please feel free to reach out to Laura at any point of time for any other information which you need.
Sure.
Yeah.
Thank you.
Thanks.
Thanks, Laura.
Okay.
Bye.
Okay, if there are no more questions, then thank you everyone, and thanks for your time, and we look forward to your continued support, and we'll continue providing you regular updates on how we are doing.
Sure.
Thank you.
Thank you. Thank you.
Bye.
Thank you. Bye-bye. Okay.
So
Okay,
Laura, I'll reach out to you for next step.
Okay, okay. Who was speaking? Sorry.
Coyote.
Coyote, yeah, hi. Yeah. Please feel free to reach out to her.
All right. Bye.
Okay. Thank you, everyone. Thank you. We'll close the call now.
Thank you. Bye.
Bye-bye.